In the world of global tech and finance, some deals don't just make headlines. They redefine the very landscape of entire industries. These are the moments when visionaries and powerhouses come together, setting the stage for a new era of innovation and competition. Today, December 29, 2025, marks one such pivotal moment. SoftBank Group, the Japanese investment giant led by the legendary Masayoshi Son, is in advanced talks to acquire DigitalBridge Group, a major player in the digital infrastructure space. This potential deal is sending ripples through the global markets, as investors and analysts scramble to understand its implications. This isn't just another merger, it's a convergence of capital, vision, and the digital backbone of our economy. It's the meeting of a financial titan with a kingmaker in the world of digital infrastructure, and the stakes couldn't be higher. SoftBank is famous for its bold, multi-billion-dollar bets on the future, investments that have shaped the tech landscape for decades. Meanwhile, DigitalBridge has quietly become a powerhouse, specializing in the physical hardware and networks that keep our digital world running smoothly. From sprawling data centers that store our information, to the cell towers that connect our devices, and the fiber optic cables that form the internet's backbone. The timing of this deal is crucial. The recent explosion in artificial intelligence and cloud computing has made digital infrastructure one of the world's most valuable and fiercely contested assets. Companies everywhere are racing to secure the resources that will power the next generation of technology. For SoftBank, acquiring DigitalBridge isn't just about expansion, it's a strategic move to secure dominance in a sector that's growing at breakneck speed and to position itself at the heart of tomorrow's digital economy. In this video, we'll break down the fascinating histories and bold strategies of both companies, and explore why digital infrastructure has become so vital to our daily lives and the global economy. We'll analyze the strategic rationale behind the deal, bring you the latest updates on negotiations, and discuss what this potential merger could mean for the future of technology, investment, and the way we all connect. So let's dive into a story of ambition, innovation, and high-stakes strategy. A story that could reshape our interconnected world for years to come. SoftBank, under Masayoshi Son, has always chased the next big thing. The Vision Fund, launched in 2017 with nearly $100 billion, poured capital into tech giants like Uber and DoorDash, sometimes with spectacular results, sometimes not. Through ups and downs, Son's belief in technology, especially AI, has never wavered. Recently, SoftBank has shifted to a more disciplined, AI-focused strategy, highlighted by its successful investment in ARM Holdings. The potential DigitalBridge acquisition fits this new vision, not just backing AI software, but owning the infrastructure that makes AI possible. It's a shift from investing in digital tenants to owning the real estate itself. By targeting the core assets powering the digital world, SoftBank aims for stable, long-term growth as AI demand accelerates. This is the Vision Fund's next chapter, owning the future's foundation. While SoftBank grabs headlines, DigitalBridge has quietly built a digital infrastructure empire. Under CEO Mark Ganzi, DigitalBridge pivoted to focus solely on the hardware of the digital age: data centers, cell towers, fiber, and edge infrastructure. These assets are the physical backbone of the cloud, the internet, and mobile communication. DigitalBridge isn't just a passive owner. It actively operates and enhances its assets, leveraging deep industry expertise. This hands-on approach has made it a trusted partner for both investors and tech companies. Its global portfolio serves the world's largest tech and telecom firms. DigitalBridge's disciplined operational focus sets it apart as a leader in its field. For SoftBank, acquiring DigitalBridge means instant scale, expertise, and credibility in digital infrastructure. It's a logical, high-impact move for both companies. Every email, stream, or video call relies on a vast, invisible network digital infrastructure. This includes cell towers, undersea cables, and massive data centers, the roads and power plants of the digital era. Without these, the cloud and e-commerce wouldn't exist. The explosion of data, driven by smartphones and AI, has outpaced what traditional telecoms can handle. Specialized firms like DigitalBridge now build and operate this critical infrastructure, leasing capacity to tech giants. The business model is stable and utility-like, with long-term leases from companies like Amazon and Google. Investors love the predictable returns. As our world becomes more connected, the value of this infrastructure will only grow. The digital revolution depends on these physical assets. The AI revolution, led by models like ChatGPT, is all about raw computing power. Behind every breakthrough in artificial intelligence, there's a vast network of machines working tirelessly, processing unimaginable amounts of data every second. These advances aren't just about clever algorithms, they're powered by the relentless energy of modern data centers. Training and running AI models requires massive, power-hungry data centers filled with specialized chips. These facilities are packed with high-performance GPUs and custom silicon, all designed to crunch numbers at lightning speed. The energy demands are staggering, and the need for constant cooling is greater than ever before. Demand for these high-performance facilities is exploding, creating a global shortage and driving up prices. Around the world, companies are racing to build new data centers, but supply can't keep up. The competition for space, hardware, and energy is fierce, and the stakes have never been higher. Data centers must now handle extreme power and cooling needs, often requiring their own substations. Some even draw as much electricity as small cities, and their cooling systems are engineering marvels, keeping thousands of servers running at optimal temperatures around the clock. The race is on to build more, and to secure the land and power to support them. Real estate near major power grids is at a premium, and companies are investing billions to ensure their AI ambitions aren't held back by infrastructure bottlenecks. DigitalBridge has spent years assembling a portfolio of these critical assets. Their network of data centers spans continents, providing the backbone for the world's most demanding digital workloads. Its expertise and resources make it a key player in the AI infrastructure boom. With deep industry knowledge and a proven track record, DigitalBridge is uniquely positioned to capitalize on the surging demand for data infrastructure. For SoftBank, acquiring DigitalBridge means controlling the digital gold mines of the AI era. It's not just about owning buildings, it's about owning the very foundation of tomorrow's digital economy. It's a strategic move to own the infrastructure powering tomorrow's technology. As AI becomes more central to business and society, those who control the data centers will shape the future. The future belongs to those who control the data centers, because in the age of AI, data is power, and the infrastructure behind it is the new frontier. SoftBank's pursuit of DigitalBridge marks a strategic pivot. The AI revolution has made control over physical infrastructure, data centers, power, connectivity, more valuable than ever. By acquiring DigitalBridge, SoftBank would become a top digital landlord, earning steady revenue from long-term leases with tech giants. This stable income balances the riskier bets of the Vision Fund. Timing is everything. AI infrastructure demand is just beginning its exponential climb. Acting now secures SoftBank's leadership before competition intensifies. The deal also aligns with SoftBank's stake in ARM Holdings, whose chips are crucial for energy-efficient AI data centers. Owning both the chips and the centers creates powerful synergies. SoftBank could shape the future of AI infrastructure from silicon to server farm. It's a bold, integrated strategy for the next tech era. News of SoftBank's potential DigitalBridge acquisition has sent shockwaves through the market. Reports suggest negotiations are advanced, with a formal announcement possibly imminent. The deal would be a multi-billion-dollar move, one of SoftBank's biggest in years. Investors see the logic: SoftBank's capital and vision, DigitalBridge's infrastructure expertise. A powerful combination. The market's positive reaction reflects confidence in the merger's potential. All eyes are on the final agreement, which could create a new titan in tech infrastructure. Together, SoftBank and DigitalBridge would form a powerhouse in global tech infrastructure. SoftBank brings capital to accelerate new data center projects. DigitalBridge brings operational expertise. This combination could fast-track the construction of next-gen facilities for the AI industry. SoftBank's portfolio companies would have a built-in infrastructure provider, fueling a cycle of growth. The link to ARM Holdings could lead to hyper-efficient data centers, optimized from chip to cooling system. The combined entity could pioneer edge computing for smart cities and autonomous vehicles. Strategic acquisitions could further consolidate the market. With global reach and deep expertise, this new leader would shape how and where tomorrow's data is processed. The future of digital infrastructure could be defined by this merger. SoftBank's move to acquire DigitalBridge is more than just a high-profile business deal. It's a bold statement about the direction of the entire technology industry. This acquisition signals a strategic pivot, reflecting how the world's most influential companies are rethinking what it means to lead in a digital era. It's a bet on the future of technology, where connectivity, speed, and data are the new currency. As cities become smarter and our lives more intertwined with digital systems, the companies that own and operate the underlying infrastructure will hold unprecedented power. True power now lies in owning the physical and digital networks that make artificial intelligence, cloud computing, and digital life possible. These are the invisible engines driving innovation, commerce, and communication across the globe. For SoftBank, this marks a significant shift, from making risky bets on startups and emerging technologies to investing in stable foundational assets that support the entire digital ecosystem. It's a move toward long-term value and resilience. The combined company would become a major landlord to the world's leading tech giants, influencing not just the cost and availability of computing power, but also the pace at which new technologies can be deployed and scaled. This could dramatically accelerate the growth of AI infrastructure, enabling breakthroughs in everything from healthcare to finance. But it also raises important questions about market concentration, competition, and who gets to set the rules for the digital age. Ultimately, this is about more than just business. It's about who will own and control the backbone of our increasingly digital AI-powered lives, a responsibility with global implications. If the deal closes, a new global leader will emerge, one with the resources, capital, and vision to shape the next era of digital infrastructure and connectivity. This leader will have the ability to build, manage, and innovate at a scale few can match, setting the pace for the entire industry. In the age of data, those who control the infrastructure will not just support the future, they will shape it, defining how we live, work, and connect in a rapidly evolving world.